Hey everyone, welcome back to Corporate Decoder. Today we're diving into the SEC filings of Vestiage Inc. And let me tell you, this one is a real page turner. If your definition of page turner involves corporate name changes and a company trying to find its way in the world, let's see if they ever figure things out. This report is basically a snapshot of Vestiage's year, from how they're doing financially to what they're worried about. It's like a corporate diary, but instead of secrets, it's filled with numbers and legal jargon. First up, a little company history lesson. Vestige hasn't always been Vestiage. Since 2006, they've been the Harvard Learning Centers, the Americas Learning Centers, Harbor Brewing Company, Hackett's Store, Wise Buys, and Empire Pizza Holdings. They finally became Vestiage in 2013 when they got into the nutraceuticals business selling healthy living products. But that didn't last. Things went quiet around 2015 and the company was pretty much abandoned. Then in 2022, the court stepped in. The company had no functioning board and its charter was revoked. A custodian, basically a corporate babysitter, was appointed to get things back on track to find someone to adopt them through a merger. Small Cap Compliance, also known as SCC, took over and did some cleaning up. They paid off debts, got the company back in good standing with Florida, and appointed some officers and directors. They even looked for a company to merge with Pulp. For all this trouble, SCC received 500,000 shares of restricted common stock and 300,000 shares of convertible preferred D series stock. Speaking of mergers, Vestiage did something rather interesting. They got rid of Fun Fitness Corporation, FFC. This fitness company was actually acquired in 2022, where Vest acquired 100% of the issued stock and 1,000 shares of Vest restricted common stock 10. They basically returned their shares for consideration, which in accounting terms means they restricted common stock sold. They basically returned their shares for consideration, which in accounting terms means they didn't get a dime. Vestiage recognized a gain of about $7,700 Series A for its stock in exchange for 500,000 shares of Vest restricted common stock stacks. They basically returned their shares for consideration, which in accounting terms means they didn't get a dime. Vestiage recognized a gain of about $7,700, which in accounting terms means they didn't get a dime. Vestiage recognized $7,700. Now, Vestiage isn't alone in this looking for a company to buy or merge with game. They're up against bigger players like venture capital firms and investment banks. Many of these competitors have more money and experience. As of the end of 2024, Vestiage has 2 officers and 1 director, which includes Raymond Fu, who serves as CEO and CFO, and Timothy Lam as secretary. Here's a fun fact about cybersecurity. They have not experienced any material cybersecurity incidents. The company uses third-party firewalls and antivirus protections. Also, the board of directors does an annual review of their cybersecurity program. Let's get to the stock performance. Vestige stock trades on the OTC pink sheets market. The price can jump around quite a bit. At the beginning of 2024, the stock traded for only $0.02. By the second quarter, went as high as $0.02. The company has never paid dividends and don't plan to anytime soon. They want to use the money for business development. Makes sense. Alright, let's look at the numbers. As of the end of 2024, Vestiage reports having 0 cash, total liabilities of about $110,000, and a total stockholders deficit, which means they owe more than they have. This company is definitely not in a good financial state. The numbers confirm the story. For the year, they lost $52,675 compared to a net income of $48,929 the previous year. The financials show a net loss due to the expenses of being a reporting company, and they have not generated any revenues. The company has relied on debt from shareholders to stay afloat, and they may need to limit activities if they can't raise capital. The company changed accounting firms in April. They fired B.S. Borger's CPA and hired Beckles & Co. It's not uncommon for companies to switch auditors. Management admits their disclosure controls and procedures, which are the processes they use to ensure the information is accurate, were not effective. There are definitely some internal control problems. They admit that they do not maintain insider trading policies. They hope to adopt an insider trading policy by the end of 2025. Insider trading policies are important to prevent executives from using inside information to make illegal profits. Let's look at who's steering the ship. Raymond Fu is the CEO, CFO, and a director. He has experience in operations, management, and NA in the finance industry, while Timothy Lam serves as secretary. The largest shareholder is Wells Profit Holdings Limited, controlled by Raymond Fu. They own over 90% of the company's stock. Small Cap Compliance, the company that came in as custodian, is considered a promoter. When Small Cap Compliance was appointed custodian, Vestiage was just a shell, but on January 12, 2023, Vest acquired 100% of the issued stock of Fun Fitness Corporation in exchange for $500,000 in common stock. The company spent $31,500 on audit fees for the year. Finally, there are certifications from the CEO and CFO, swearing that the information in the report is accurate. Now, for my overall thoughts on Vestiage, the company is facing some serious challenges. The auditor's report mentions there's substantial doubt about their ability to continue as a going concern, which means they might not be around for much longer. They're losing money, they have a big deficit, and they need to raise more cash. It's basically a company looking for a purpose, and it's unclear if they'll find one. There are definite risks, but if they can find the right merger target and get their finances in order, there might be some hope. If they can find the right merger target and get their finances in order, there might be some hope. Overall, Vestiage is a high risk, high reward situation. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives.